What if I told you the secret to building wealth wasn't really a secret at all? What if it was just a simple, clear path that's been hiding in plain sight this whole time? Well, today, we're going to pull back that curtain and show you the exact roadmap.
And this quote right here, it gets straight to the heart of the problem. There is a massive, multi-million-dollar industry designed to make you feel like investing is way too complex for the average person. Why? Because, as it says on the slide, your confusion is their profit center. They literally profit from all the noise and complexity. But what if the truth is actually the total opposite?
So this is the big idea, right? Complexity is the enemy, not the solution. You don't need to be some kind of financial wizard or have a secret algorithm to build wealth. Turns out the path is surprisingly simple, and it all starts with understanding a really basic roadmap.
And here it is, seriously, the entire journey in 3 simple steps you see right here. Spend less than you earn, invest that surplus simply, and then, the hardest part for many of us, wait patiently. Now, it's not always easy to do, for sure, but the plan itself, it couldn't be any clearer. So let's dive into the foundation. Step 1. Okay, this first phase is all about getting your financial house in order. And notice, it has absolutely nothing to do with picking stocks or stressing about what the market is doing today. Nope, this is all about your personal habits. Before you can even think about building wealth, you have got to stop the bleeding. I'm talking about high-interest debt, especially from credit cards. It's a financial anchor, just weighing you down. Every single dollar you pay in interest is a dollar that can't be working for your future. This isn't just a priority, you guys. It's a full-blown financial emergency. You know, this slide perfectly captures a huge shift in thinking. Your financial success isn't about how big your paycheck is, it's all about your savings rate. I mean, a doctor earning $300,000 a year can easily be broke if they're spending it all, right? Meanwhile, a teacher making $50,000 can become a millionaire. It's not about what you earn, it's about what you keep.
And this is the ultimate goal of all that saving. It is not about fancy cars or designer clothes. It's about building what the author so bluntly calls FU money. And look, this isn't about being aggressive or rude. It's about having the power of choice. It's that financial cushion that lets you walk away from a toxic job, or take a risk on a new business, or just live life on your own terms. It is the purest form of freedom.
All right, so you've crushed your high-interest debt, you're consistently saving money. What's next? Now it's time for step 2, putting that surplus to work. But you got to remember the core idea here. The key is to invest simply.
This is a hard truth for a lot of people to accept. I get it. The financial news loves to glorify the hotshot stock pickers and the day traders, but the evidence, oh man, the evidence is overwhelming. Trying to outsmart the market is a loser's game. The vast majority of people who try end up doing worse than the market itself.
So this slide really lays out the fundamental choice every investor has. On one hand, you can spend your life trying to find that one winning needle in a giant haystack, paying super high fees for the privilege of trying. Or you can just buy the entire haystack with a low-cost total stock market index fund. By owning a tiny piece of thousands of companies, you literally guarantee you'll capture the market's overall growth, all without the stress and without those crazy fees eating away at your money.
This is such a massive mindset shift. When you're a long-term owner of the market, a crash isn't a disaster, it's a sale. It's like your favorite store is suddenly having a 30% off everything event. You should be excited to buy more shares at a cheaper price. The key is to just ignore the scary headlines and keep buying consistently, no matter what. Okay, so you've done the hard parts. You're saving consistently, you're investing simply. Now comes step 3. This is the phase that does all the heavy lifting for you. This is where you just let the almost magical power of compounding take over. This right here, this is the engine of wealth creation. It's called compounding. The best way to think about it is like a snowball rolling down a really long hill. At first, it's small. You can barely tell it's growing. But as it rolls, it picks up more and more snow, getting bigger and faster. Your money works the exact same way. Your returns start earning their own returns, and pretty soon, the growth just becomes exponential.
And this timeline shows you exactly how that snowball gets rolling. For the first few years, honestly, it feels painfully slow. But look at what happens. Around year 10, that curve starts to bend upwards. By year 20, the growth is accelerating like crazy. And then, the explosion happens. You get to a point where your money is earning more in a single year than you're even putting in. That my friends, is the power of time. Okay, this is probably the most important number in this entire explainer. Because of compounding, a single dollar you invest in your 20s has the potential to be worth 10 times more by retirement than a dollar you invest in your 40s. That's just the staggering cost of waiting.
Let this sink in for a second. Your single greatest investment advantage isn't some secret stock tip or a complex algorithm. It's time. It's the one thing you can't get back or create more of. You know the old saying, the best time to plant a tree was 20 years ago? Well, the second best time is today.
So after all of this, you might still be looking for that one hidden trick, right? The secret hack to it all. But the real secret isn't about being a genius or knowing some complex formula. It's about something way more accessible to all of us. And this is it. This is the whole playbook, right here on one slide. The secret is just consistency. It's about having the discipline to follow these simple rules over and over for a very long time, while tuning out all the noise that's trying to get you off track.
Look, the path we've laid out here is simple, but that definitely doesn't mean it's easy. It takes discipline. The financial industry wants you to believe you can't do this on your own, but you absolutely can. So the real question isn't just what you'll do with this information, it's when are you going to start?